For decades, the global financial system has had one undisputed anchor, and it was the US dollar. The US dollar is still very much dominant. Global goods and commodities trading happens in US dollars. Governments and companies around the world issue debt in their local currencies, but also in US dollars. And the central bank reserves around the world are mostly made of US dollars via their US Treasury holdings. But what happens if confidence in the US dollar erodes and creates an opening? Could the euro fill in that gap? What would take the single currency to get there? So today we are going to be talking about the euro's challenges and opportunities in a changing world as Europeans quietly, and sometimes not so quietly, take aim at the US dollar's dominant role in global transactions and reserve portfolios. But before I engage in this conversation, please remember that opinions are my own and this is not financial advice.
This show is brought to you by Swissquote.
Let's be clear from the beginning, the US dollar is not disappearing. It remains the world's primary reserve currency, accounting for roughly 60% of global foreign exchange reserves. The euro comes after, and it sits far behind the US dollar in this picture. But dominance doesn't need to collapse to matter, right? It only needs to weaken at the edges, and this is what's happening today. Three forces are shaping the US dollar's dominance story these days, and we are going to talk about those in detail and what it could mean for the euro. First, there is the geopolitical weaponization of finance, right? The freezing of Russian reserves after the Ukrainian invasion show that access to dollar-based systems is conditional to the relationship with the United States. And the relationship between the US and the rest of the world, including allies, has been weakening since the beginning of 2025 due to important changes in the US trade and geopolitical policies. Second, the US fiscal trajectory is not ideal. The US continues to run large and larger deficits, with debt to GDP levels climbing to historically high levels and political decisions making long-term fiscal consolidation very much unlikely. Yes, I'm thinking of the big and beautiful tax bill here, for example. Investors still trust US treasuries, but they are increasingly asking questions and thinking about maybe replacing the US dollar by alternative holdings, including gold, for example. And third, global trade becomes fragmented. Globalization gives way to distinct blocs today. There are friendly and unfriendly countries that trade with each other, and economic blocs are exploring alternatives to US dollar, including local currency settlement agreements, for example, bilateral swaps, maybe a joint currency backed by gold, regional payment systems, and so. Now, none of this dethrones the US dollar tomorrow, but it does open a conversation, and Europeans explicitly want to be part of this conversation because a strong international role for the euro will bring exclusive advantages to the Europeans and their economies. So let's talk about these advantages. First, today, much of global trade, even trade not involving the US, is denominated in US dollars. That means European importers and exporters are exposed to the US dollar volatility. When the US dollar strengthens, it raises the local currency cost of imports, particularly the cost of commodities and energy that are priced in US dollars. So a euro-denominated trade would reduce these transaction costs, lower hedging expenses, and stabilize profits for the European businesses and companies. It would also reduce the pass-through of US dollar swings into the European inflation. And that's a major advantage. Second, euro would protect itself from imported inflation, and that's a big thing. For a central bank like the European Central Bank, that matters a lot because currency-driven inflation shocks complicate monetary policy. So if euro pricing expands beyond the euro area, euro would be gaining a layer of insulation. Then three, and this is very much crucial, if governments and corporations outside Europe around the world begin issuing more euro-denominated debt, then two things happen. First, demand for euro assets rises structurally and organically. And two, euro becomes a funding currency. And having a funding currency would deepen the European capital markets, increase liquidity, strengthen the euro's global standing, and would bring more money into Europe, benefiting European businesses and companies and economies. A dominant euro would also give Europe influence, financial influence, without firing a single shot. And that's a huge privilege. Economists call it an exorbitant privilege, a privilege that only the US has today. Because the US dollar's reserve status today helps the US borrow cheaper, run persistent deficits, and shape the world to its taste, basically. So if the euro's share in global reserves increases, Europe could capture a fraction of that privilege too. Lower sovereign borrowing costs, deeper bond markets, stronger financial autonomy, and a stronger global position. All that is great, obviously, and Europeans want it. But is it feasible? Well, this is where things get complicated. The euro is already the world's second reserve currency, so it's still quite dominant, but not enough to give Europeans all these advantages that the US dollar gives to the United States. So there's a big gap between the first and the second place. And to seriously challenge the US dollar, Europe needs stability, it needs scale, unity, and safe assets. So let's talk about these. For the first part, political and fiscal stability, well, the euro area is anchored by rule of law and willpower to rein in on sovereign debt, which is a great thing today because the latter is being challenged in the United States, so it gives the euro an advantage on the US dollar. Second, Europe is one of the world's largest trading powers. It has very deep connections across Africa, Eastern Europe, Middle East, and parts of Asia. And the euro is already widely used in neighboring regions. So expanding euro invoicing in trade agreements is not unrealistic, especially as the EU now pushes strategic autonomy. Third, Europe has positioned itself as a leader in green bonds and ESG-linked finance, as the United States is pulling back. If euro-denominated sustainable finance markets continue to grow, that would create a niche where the euro can eventually dominate by design. And four, after the sovereign debt crisis a bit more than a decade ago, Europe built new tools. Banking union mechanisms, stronger fiscal oversight, and even opted for pandemic-era joint borrowing. And that last one is particularly important because the joint EU bond issuance created something that Europe has long lacked: a quasi-safe supranational asset denominated in euro. But it's not yet at a level that could stand up to the US treasuries, unfortunately. And that's one of the biggest problems here, because the United States has one treasury, Europe has many of them, and without a full fiscal union, meaning shared taxation and permanent joint debt issuance, the euro would be lacking a single, deep, unified safe asset market compared to the US Treasuries market. And while political divides are too wide to manage that problem today, North versus South, frugals versus spenders, federalists versus nationalists, unifying Europe under a single fiscal roof while populism is also rising is simply unrealistic at this point in time. So that, to me, is one of the major challenges for the euro in becoming the new US dollar. Then the euro area is dependent on energy imports. Green transition could change that, but the transition can't happen fast enough. It's not going to happen overnight, and Europe's energy needs create persistent current account sensitivities, and the latter could actually stand in the way of the euro willing to become the world's currency of choice. And finally, convincing the world to convert to euro trading means changing everything: trade contracts, derivatives markets, payment systems, SWIFT infrastructure, commodity exchanges. All these systems today are deeply dollar-centric, and changing that to euros will take years and a lot of effort and investment to do so. So the euro would need not just political will, but a broad-based global coordination and trust to scale meaningfully and get there. Now, it's not impossible, but it's quite very hard to achieve still. The euro can become a serious competition to the US dollar, but only and if only the euro area countries issue permanent joint bonds to scale up the EU level safe assets, unify their capital markets to improve liquidity, and go against the US by encouraging euro invoicing in energy and commodity agreements, a thing that the US will hardly watch silently. And unfortunately, the EU has no means or no will to fight the US on this one. So realistically speaking, is the US dollar about to lose its crown? No. But is the era of unquestioned dominance over? Possibly. We may be moving from a unipolar currency world towards something more diversified, where the US dollar still dominates, but euro strengthens its position while remaining secondary, while on the other hand, the Chinese renminbi, for example, also would be rising regionally. In the particular case of Europe, the opportunity is not necessarily to replace the US dollar, but to narrow the gap, to increase strategic autonomy, to reduce imported volatility, and to ensure that when geopolitical tensions flare, it is not entirely dependent on someone else's currency system. In summary, the Europe's biggest strength, a union of sovereign democracies, is also its biggest weakness. Diversity creates resilience, but it also creates friction. So the question is not just what happens when the US dollar weakens, but it's whether Europe can strengthen, but strengthen together. That may be the harder challenge of the two. So this is it for today's discussion on Euro. I'm İpek Özkardeşkaya and thank you for watching and thank you for all your beautiful and supportive comments. Please don't hesitate to shout out and let me know what you think of the Euro's capacity and ability to rise and shine in the comments below, and hit the like button to let us know that you enjoy these videos. I will see you again very soon, and until then, goodbye.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.